Hey everybody, this is Ray Halstead and Patricia Nass with REH CPA. Some of you out there may not be aware, but when you sell your home, sometimes you have to report it on your taxes and sometimes you don't. I've got Patty here with me today. Patty, what can you tell us about when you have to and when you don't have to report the sale of your home on your tax return?
Sure. So, when you sell a home, a lot of people know, some don't, that there is an exclusion if it's your primary residence, you've been in it at least 2 out of the last 5 years, and you haven't sold another primary in the last 2 years. So if you're single, you get $250,000 exclusion of the gain. And if you're married, you get $500,000 exclusion. So most people think, oh, I got an exclusion. I don't need to report this, nothing to worry about. However, sometimes there's a 1099-S that gets sent out, that gets sent to the IRS. It gets reporting the sale of the home. So you definitely want to make sure to include the sale on your tax return. You won't have a gain if you're under those limits, but you still want to make sure to report it. Otherwise, the IRS will send you a notice saying, hey, you had this huge sale and we don't know your basis, and they're just going to assume tax on the whole entire thing.
Right. Yeah, they're definitely important. Anytime you sell a home, definitely follow up with the attorney to see if they issued a 1099-S, because they don't all do it. They're not always required to. So some do, some don't. It's completely random. I've never been able to figure it out. It just depends on what that office does. So definitely make sure that you inquire whether or not you're going to receive one.
Or just be safe. And just report it.
There's
That's what we
that
kind of
too.
tell people.
Yeah, there's that too. Just report it. Yeah.
But there's also other times. So if you have a home office, then again, sometimes you have to report it and sometimes you don't. So I don't know if everyone really knows this, but a home office, if you take actual expenses on it, then you depreciate a portion of your home during that expense that you're taking for this home office. So the IRS does require you to keep track of how much you've depreciated it for your actual expenses, and then you got to recapture that depreciation. And that portion, even if you have that exclusion, that portion is still taxable no matter what. So you need to report it under those circumstances. Now, some people choose a simplified method. It's $5 a square foot, up to 1,500 square feet. Some people try to do that instead, and that you don't need to worry about the depreciation recapture. So
if you had a home office, you really need to look and see. You really need to look and see how you were if you were taking depreciation or if you were just on the standard amount.
Yep.
Okay.
Yeah.
Well, that's really good information, Patty. If you've sold your home and you're wondering if you have to report it, feel free to give us a call and we'll help you out. Thanks.